Day trading for beginners. How to make $100 a day from home. Day trading has become one of the most accessible ways to earn money from the comfort of your own home. With just a computer, a stable internet connection, and the right strategy, anyone can potentially make $100 or more a day. However, it's not as simple as pressing a few buttons. It requires knowledge, discipline, and consistency. Before we get started, subscribe to our channel and turn on the notification bell so you never miss our latest content. Understand what day trading really is. Day trading involves buying and selling financial instruments, like stocks, options, or forex, within the same trading day. Unlike long-term investing, where positions are held for months or years, day traders close all trades before the market closes. The goal is to profit from small price fluctuations using technical analysis and fast decision-making. It's not gambling, but a skill-based approach to capitalizing on volatility. To succeed, you need to treat day trading like a business, not a hobby. The markets are fast-paced and unforgiving, so learning the mechanics, tools, and strategies is essential before risking real money. Beginners should start with education and practice in a simulated environment before trading live. Set a realistic financial goal. Making $100 a day from trading is achievable, but only with the right mindset and preparation. Setting this goal gives you a target to focus on, but it's important to keep expectations grounded. You won't hit $100 every single day when starting out, and losses are part of the game. Instead, focus on consistent strategy execution and risk management, which are more sustainable in the long run. Break your goal down. If you aim to make $100 per day, that could mean 2 trades at $50 profit each or 5 trades at $20. By focusing on small, consistent wins and avoiding greed, you'll protect your capital and build confidence. The key is consistency, not big wins. Choose the right market for you. There are several markets suitable for day trading, including stocks, options, forex, and cryptocurrencies. Each has its pros and cons. Stocks are highly regulated and provide lots of data. Forex offers high leverage and 24-hour access. Options have defined risk. And crypto operates 24/7 but is very volatile. Picking the right market depends on your capital, risk tolerance, and trading hours. As a beginner, start with one market and master it before diversifying. Stocks and ETFs are often recommended for newcomers due to the availability of educational resources and relatively stable price movements. Focus allows for faster learning and fewer mistakes. Open a trading account with the right broker. Your broker is your gateway to the market, and choosing the right one is crucial. Look for a platform that offers low fees, fast execution, solid customer service, and a user-friendly interface. Some top brokers for beginners include TD Ameritrade, E-Trade, Webull, and Interactive Brokers. For crypto, platforms like Binance or Coinbase may be ideal. Make sure your broker provides a paper trading or demo account. This allows you to practice trading in real market conditions without risking real money. Test different strategies until you're consistently profitable before going live. Learn technical analysis and chart reading. Day trading heavily relies on technical analysis, the study of price charts and trading volume to predict future price movements. You'll need to learn how to read candlestick patterns, support and resistance levels, moving averages, RSI, MACD, and more. These tools help identify potential entry and exit points. While this can seem overwhelming at first, consistent practice will build your confidence. Start with basic concepts and gradually incorporate more indicators as you gain experience. Avoid overloading your charts. Keep it clean and simple. Develop a trading strategy that fits you. A trading strategy is a repeatable method you use to identify and execute trades. It includes the criteria for entering a trade, setting stop losses, and taking profits. Strategies vary. Some focus on breakouts, others on reversals or momentum. The key is to pick one, backtest it, and stick to it. Good strategies include risk-reward ratios of at least 1 to 2. This means if you're risking $50 on a trade, you should aim to make at least $100. Never trade without a plan. Emotions can ruin your day if you're making impulsive decisions. Start small and use proper risk management. Risk management is what separates professional traders from gamblers. Never risk more than 1–2% of your account on a single trade. This ensures that even a string of losses won't wipe out your capital. Start with a small account. $500 to $1,000 is enough to begin practicing real trades with a focus on discipline. Always use stop-loss orders to protect yourself. Calculate your position size based on how much you're willing to lose. This discipline helps you survive the learning curve and reach your $100 daily target over time. Track your trades and learn from mistakes. Keeping a trading journal is essential. Record every trade you make, entry, exit, size, strategy used, and the result. Over time, this data reveals patterns in your performance, helping you refine your strategy and identify what's working and what's not. Even losing trades offer valuable lessons. Review your trades weekly to spot mistakes and areas for improvement. This is how pros grow, not by winning every time, but by learning from losses. Treat every mistake as a tuition fee in the school of trading. Maintain discipline and emotional control. One of the hardest parts of day trading is managing your emotions. Fear and greed can destroy your performance faster than a bad strategy. Avoid revenge trading after a loss, and don't overtrade when you're on a winning streak. Stick to your plan, no matter what the market throws at you. Establish a routine to help maintain discipline. Set your trading hours, take breaks, and review your rules before each session. Emotional control is a skill that improves with experience, and it's vital for reaching your daily income goals. Scale up only when ready. Once you've proven that you can consistently make profits and manage risk, you can begin to scale. This doesn't mean trading with more emotion. It means increasing your position sizes with the same strategy. If you're making $100 per day with $1,000, scaling up to $10,000 could help you make $1,000 per day, but only if your discipline remains intact. Never rush the process. Let your profits grow naturally and reinvest them to build your account. The goal is financial freedom through consistency, not a one-time win. Day trading is one of the few careers where you can earn a living from anywhere, at any time, with just a laptop and an internet connection. But it's not easy money. It's a serious discipline that demands preparation, patience, and constant learning. If you're willing to treat it like a business, follow the rules, and keep your emotions in check, you can hit that $100 per day goal, and potentially much more. If you enjoyed this video, give it a thumbs up and subscribe for more content. Hit the notification bell to stay updated with our latest videos. Share your thoughts in the comments below. Thank you for watching.